Hi, I'm Eddie Sanaji, and welcome to Your Finance TV's Crypto Revolution, covering all things crypto and digital assets. We're here with Adam Blumber, co-founder at Interaxis. Adam, how are you, mate?
I'm doing good, Mehdi. A little bit of a crazy last few weeks, but I'm looking forward to the discussion today.
I said, I think this is going to be rampant with all things regulatory today.
As usual, man. If we're not
As
talking regulation in crypto, I don't know what kind of day it is.
There's nothing else to talk about. Um, so obviously tune in for more regulatory chit chat on the hour. But before we dive into it, don't forget to like and subscribe, and make sure you let us know of any topics you want us to discuss, especially outside the regulatory universe. But we have lots and lots to get through. And let's dive right in. I want to kick off on, whether it's macro, regulatory, it's all the same thing these days. But there's been Binance again in the news flow, as always. We saw concerns, over the last several days. Crypto asset markets. There's been concerns, and I'll be honest, it does feel a little bit tense out there. People are jumping on the fact that the SEC is, banning altcoin trading or trying to, and after the lawsuits filed against Binance and Coinbase, people are getting nervous, right? And
Right.
Binance has suspended their US deposits, which I guess is the right step to go towards. They've also slowed down their withdrawals. I see that more as a managing expectation type thing for anyone trying to withdraw their assets. They're not saying they close it, but they're just saying it could take longer. Um,
And
this
and
isn't,
they're trying to prevent a run, right? They don't
yeah,
want everyone just running and pulling out their money because people saw what happened to FTX, and they, might or might not get their money back. And so I think what Binance is trying to stop is, one, they don't want more people bringing in money that might get frozen by the SEC or someone at some point. And they certainly don't want a run on the quote Binance Bank. They don't want everyone pulling out their money at the same time, because then they'll be left, defending an organization, an entity that doesn't have anything in it. So I think what they're trying to do is just say, okay, we're good right where we are. We're going to keep, business going if we can, but we don't want too much more money coming in or going out.
and Binance, correct me if I'm wrong, the US is not the biggest market for Binance. And
No.
this ultimately, it, for the first, no, that seems unfair as well. Not for the first time. Binance is trying to do things in a way that will not create another FTX situation, as you say. So, this isn't a big deal. It's just more headline mongering from the media, right?
It's a little bit of headline mongering, but it's a little bit of accuracy, Medi, in that we're not quite sure what's going to happen. What we've seen so far is, one, even though we've seen these crypto companies for a while, even though uh, cryptocurrency blockchain is supposed to be so transparent, we've already seen with Celsius and Voyager, and then FTX, where there's not as much money as we thought, or it's not in the place we thought, it's not as safe as we thought. And what we've also seen is the government, the US government in particular, is perfectly willing to bring those down. And you pair those two things together, and I can see where people would be a little fearful and go, look, I can potentially buy Bitcoin anywhere. Why am I going to keep it at Binance when I can move it over somewhere else? Of course, that
Completely.
somewhere else might be Coinbase, and SEC's going after them too.
Where is safe these days? But then also, what I find vaguely reassuring is the fact that you watch these headlines come out, you see Bitcoin go zoom, and then it starts slowly tickling back up. Like it's not going anywhere fast, but I feel like people have that knee-jerk reaction. They sit down, they digest it, they read it, and people are getting a lot less. And I don't know if this is now the existing investment base in Bitcoin and other crypto assets, but they're getting much better at kind of like digesting it, trying to evaluate the risk reward versus the whole situation, and not going out of whack on these things. So to see Bitcoin where it is, to see some of these other coins have got smoked, right? Don't get me wrong, but
Right.
I'm just using Bitcoin as an overall barometer for the bigger picture, right? And I
Right.
feel that's maintained a decent level through all of this.
Right. And you remember, okay, so Bitcoin goes down whenever there's some bit of tiny bad news, right? And that's partly a function of who the investors in Bitcoin are, right? There are so many institutions. And so I think when you see the price tick up, we'll talk about that in a moment, that's the institutions coming in and keeping the price where it needs to be. But you have so many retail investors all over the world who got into Bitcoin, who maybe don't understand investing or see it as somewhat speculative. They're trying to, turn their $100 into $10,000 or something. And as soon as there's a tiny bit of bad news with clearly the most liquid asset ever created, then you just get out, right? Like if I wake up in the morning at 5:30 in the morning and I look at my phone and I see the SEC is suing Binance and Coinbase, my first thought is probably, this is all going to hell. I just need to sell it because hopefully I don't have a whole lot of money in it, and it drives the price down. You don't necessarily see a ton of volume, but you see people selling and it's driving the price down. And then everyone goes, oh, it's not as bad as we thought. And institutions probably primarily step in and go, no, this really is short term. It doesn't have effect on my long-term investment thesis. When we're talking about Bitcoin and probably ETH, as we roll in, and I think in this discussion, we'll get into other coins. As we roll into other coins, it's very different. But in Bitcoin and primarily ETH, you have this knee-jerk reaction because everyone can just do it on their phone, right? It's 24/7, 365, no matter where they are. You hear bad news, you go, it's over for crypto. I'm going to sell my Bitcoin because why do I want to deal with this risk? On top of that, why do I want to deal with the anxiety and the heartburn and all that, when I can just as easily go invest in something else?
Absolutely. And, that kind of leads me into another kind of topic that's kind of come up, right? We touched on this a couple of weeks ago when the initial suits were laid against Coinbase and Binance, right? And we kind of said that Binance didn't feel like they had any grown-ups in the room that had come from that traditional financial world, much like FTX, right? Where, do these guys really know how to manage their risk? Are they doing the right thing, commingling funds, not commingling funds, whatever it is, right? Whatever they're accused of doing, have they done it or have they not? And Soros Fund Management, big fund, the CEO, Dawn Fitzpatrick, she was out on Bloomberg at some conference, and she was basically saying, that it could be ripe for traditional finance to start getting involved in taking over some of these DeFi firms and, to put adults in the room. So she was echoing what we were talking about, right?
Right.
Does she see herself as one of those adults, right? It's one thing. And, I personally, she was also throwing Coinbase in that universe with Binance as well. I think that was unfair because I think Coinbase has tried to be an adult in this whole situation.
Right.
But, what do you think? Do you think that some of these hedge fund types are now going to start nibbling away at some of these DeFi firms?
Yeah. Well, I think it's not just hedge fund types, because they're obviously able to evaluate risk and go pretty deep on their due diligence. And on top of that, they have a lot of money. They have a lot of cash, right? Overall, even though crypto overall has, barely over a $1 trillion market cap, if that's what we want to use, these monster hedge funds, you put all these monster hedge funds together, and $1 trillion isn't that much. They can get in the market and it doesn't even materially affect them when the price moves a little bit. But what we also see, Mehdi, is some of the incumbent TradFi custodians are getting in the picture even more, right? Fidelity has been in for a while. BNY Mellon has reiterated the fact that they're still in, and they're actually going full bore on it even more. So I think that's what we're going to see. And maybe that's what the SEC wants, is more of these traditional firms, these traditional custodians that we know and trust, playing on those years of trust, going, we'll hold your Bitcoin for you. We'll hold your ETH for you, right? Like, let us do it because you know us, you already have other accounts with us. We're already holding a bunch of other assets. We'll take it on. After all this kind of regulatory dust has settled, they're going to get to step in and go, all right, now, you've been asking for us to get in. We're ready to get in now. You guys have been, it's a fun game you've been playing for a little while with all the volatility and issues with the SEC. We know how to deal with regulation.
Let's go. And that's a perfect roll into the whole universe, right? So speaking of regulation, obviously Binance has been front and center. The SEC had also requested to try and freeze their assets, but that's been overturned, right? So we're seeing all sorts of angles going on in this, and it's fascinating, right? You've got regulators getting in trouble with their own with the different government bodies, right? Because they're overstepping their bounds. what happened here with Binance? They can't freeze their assets.
Right. So the SEC requested that the Binance US assets, and that's important, the Binance US assets, which is a different entity, different custody, everything from Binance.com, international,
Much smaller entity.
much smaller entity. The SEC requested that their assets be frozen, saying that we're worried that CZ and others are going to be able to take customer funds out of Binance US and roll it into all their other funds that we allege that they've already been doing. Okay. And when they went in front of the judge to request this, that Binance US be frozen, which by the way means customer accounts frozen. It means no one at Binance US gets paid. It means it has all these ancillary effects. And the judge looked at it and struck it down and basically asked the SEC attorneys, and this is, I didn't watch this or anything, I've read about it, was asking the SEC attorneys, can you show me any proof that any Binance US funds have left the US? And when they couldn't do it, she said, this is ridiculous. I'm not halting a whole company that you haven't proven has done anything wrong yet. I'm not going to do it. You all need to go to an arbitrator and figure this out. You need to go to a mediator and work this out. But I'm not going to freeze the accounts of the company right now. And which is a big deal. You mentioned it's a knocking down of the SEC a little bit. It's little chinks in the armor here and there. We talked last week. Coinbase has been ready and gearing up for this fight, and I don't think the SEC has a lot of legs to stand on. I think they're going to get hurt by this fight, and honestly, by the time it settles, I don't think Gary Gensler will be there.
I'm very inclined to agree with you, and I think we're going to dive into a few more of these topics, but one of the knee-jerk reactions we're seeing is like take some of these VC firms like Andreessen Horowitz, right? A16Z, Z.
We'll go Z just for you.
We'll go with Z. So they've opened up a London office, right? And they basically said that they're seeing the UK to become a crypto hub, right? The crypto hub, right? Which is fantastic for
the UK is trying to be a crypto hub, right? They put regulation in. They obviously are a monster financial center in the world anyway, and they've welcomed A16Z to have their first international office there, and Chris Dixon of A16Z was there and openly welcomed, and they were basically saying, look, we can use this as our hub to invest in the UK, in Europe, in the Middle East. This is Andreessen Horowitz saying we're not going to go all the way to Dubai right now to open an office, but we'll open in the UK because this can be our financial center outside the US, because it's just too hard dealing with crypto regulation right now in the US. There are too many unknowns.
And that's the thing, right? And it's not like we're saying, the UK is an outlier in embracing crypto, and whether it's a regulatory framework or inviting businesses to come and headquarter there. You've got France, Portugal, Saudi, Singapore. There's just a ton of countries that are throwing their hat in the ring. It's literally only the US and obviously Russia, but like looking at the developed universe, right? The US is the biggest boy on the street, and they're the ones who just can't get their act together.
Right. And funny that under your breath you say, oh yeah, and Russia. Because the tactics seem very similar, right? It seems very similar. What they're doing is trying to take an innovative technology that can help more people have access to a financial system, more transparency and everything, and they're trying to stamp it out completely. It's not we're trying to put in sensible regulation to help it grow. It is we're trying to get rid of it altogether. And it's funny that you lumped them in with Russia. Even China is moving forward with crypto. Hong Kong. The EU has sensible regulation, all of these places, and we're the only ones. And it seems like it's all of the US. It seems like it's pretty hard, the SEC and the Fed.
So this also is kind of blending into another messy situation, right? I saw there was a congressman, Warren Davidson. He filed legislation that would restructure the SEC and fire the chairman, Gary Gensler. Like, is this right? Is this all just like headlining noise, or is there any potential teeth in these types of things that come out?
That, from a legal perspective, I have no idea. I have no idea if it could have any teeth. What it shows us between what the judge said in the Binance US case, what we know, Coinbase has several arguments. We have seen not only Warren Davidson, but Patrick McHenry and several others just come out and say, and Tom Emmer, who's the majority whip have come out and said, we don't want Gary Gensler in charge of the SEC, and we don't like what they're doing. We don't like that he is not helping foster innovation. And at one point, Mehdi, I honestly thought this was just campaign talk. This is just like, I want crypto people to vote for me. But now I think as it moves on and on and on, and what the SEC is doing is clearly trying to get rid of crypto altogether in the US, except for Bitcoin for some reason, then what these Congress people are saying is, this is not, we're not supposed to be doing this. And we don't have the power necessarily to remove him. That's an executive branch thing. But we're going to do everything we can to make sure that the executive branch and everyone else knows that we are completely against this. And it right now has been very GOP based, and I'm not going to get into politics, but it seems to be that there are more Democrats coming across going, yeah, we don't really like this either.
Well, let's see how all this pans out, because there's obviously, you've got the political kerfuffle, you've got the market kerfuffle, and like now we're seeing, Robinhood's tried to tag themselves onto Coinbase, saying that they've been trying to work with the SEC, but that I see that as BS. I think Robinhood has actually gone a long way in creating this casino-like effect, whether it be in crypto or stocks as a general. So they have a little less credibility, in my opinion, in regards to how they're trying to place themselves with the SEC. But they have stopped. I think they ended support for Solana, Polygon, and Cardano with all this stuff going on. So what does that mean if you're a Robinhood customer? Does it, like, what happened to if you've got holding Cardano?
Well, I think what happens, I think they give a date, and they said by this date you have to have removed your assets from these, remove these tokens from your account. I think that's it. It's not like it just ended one day. By this date, you have to get them off. And I'm not quite sure what happens if you haven't done it by that date. If for some reason you're the type of person who buys crypto assets and then completely ignores the market after that, which I don't think there's anyone like that. So you're probably going to know. Now, going back, the reason why they removed all these is because these are crypto assets that the SEC has said in numerous suits they think are securities. And so Robinhood, in wanting to probably protect the rest of their exchange business, says this isn't worth it. This is such a small piece of our business. We might as well just delist these until there's some sort of clarity on what is a security and what is not. And if we want to go back to that discussion a little bit, again, where the SEC has fewer legs to stand on is, from what I have read, again, I'm not an attorney, but from what I've read from attorneys who've looked at this, it is actually not legal for the SEC to keep throwing these securities in these monster suits, because what they're doing is they're saying Polygon and Algorand and Cardano and such they're not giving them a chance to come in and have their day in court to determine why they're not a security, like XRP is having right now. They're not giving all these companies or organizations that created these tokens the ability to defend themselves. They're lumping them in the Coinbase suit or the Binance suit, which actually, from what I've heard, is not legal and is against what they can do as a regulator. So we'll see, how that pans out and what judges say about that. This is where it goes to the judicial branch and they get to decide. But again, that might take years.
Absolutely, and just to address the Robinhood, if someone doesn't sell their stake, I think what happens is you do get a forced liquidation.
That's probably likely.
That's generally what happens.
Likely goes to cash or something. And what it's done, Mehdi, is it obviously caused the prices of those tokens to go down significantly when they were delisted, because they were delisted from Robinhood first and then eToro. Not that they're monsters in liquidity there, but it caused the prices to go down because you wonder, okay, are others going to do the same? Are other exchanges, Gemini, Coinbase, Kraken, going to do the same?
Now, while we're still on the topic of these coins and this whole side of stuff, obviously the Coinbase lawsuits going on. Coinbase did come out and say that in regards to their addressing the staking situation and the conversation around staking, that they would not back down. They would continue staking. Good for them. I think that Coinbase is digging their heels in. They've obviously done their homework. They've obviously got a decent legal team. And listen, if you're Coinbase, you're sitting back, you've tried to work with regulators, you've done everything you can to work with regulators, but now you're seeing all sides now bring cracks into the regulators themselves. I'd be feeling pretty good about myself if I'm Mr. Coinbase.
I think so. I think they know that they can weather the storm, right? They can last a few years of doing this. Two, they know that by the time it gets any place, there might either be legislation in place that sets what the new regs are, or there might be a new president that puts in a new head of the SEC. So they just kind of have to play the waiting game.
Yep.
And then it's certainly not going to take business off the table in the meantime. So they know, and they know they have a really good case. And keep in mind, this is a huge monster lawsuit with all sorts of things in it against Coinbase. It's not like it's not like the SEC is going to win them all, probably. Right. There might be one or two things. There might be a place where Coinbase maybe didn't register something they were supposed to register, and there is a process to do so. But that doesn't mean they're going to lose it all. And so Coinbase is going, no, this is our entire bread and butter, as opposed to Robinhood, who has a traditional equities exchange, right? Like that's what they need to protect. Coinbase, this is it. Crypto is it. If they lose, they're done.
Yeah. So obviously much larger focus.
Right.
But while all this is going on, at least we're still seeing some form of applications being explored and stuff. And one that really caught my eye, which I loved, anyone in the financial world has come across SWIFT, which is the Society for Worldwide Interbank Financial Telecommunications. Say that 53 times fast. It's a staple in the financial transaction world. They're testing how institutions can use SWIFT existing connections to interoperate with blockchain networks. I see this as really cool, right? They're trying to utilize existing pipes to be able to facilitate this DeFi world.
Yeah.
This is good. And it's obviously all institutional based.
Yeah, it's really interesting because because this isn't just Swift saying, hey, we want to build something on top of blockchain or something like that, or we're going to build our own chain or something. This was actually really interesting because everyone's talking about tokenized assets, tokenized securities, real world assets, whatever it might be. And I actually just did a 7-part YouTube series about real world assets. And part of that is, public companies, private companies, tokenized. And what Swift is doing is saying, look, many of these tokenized assets, which is just basically a token might represent a private investment or a public investment or something. Many of them are happening on different blockchains that are not necessarily interoperable on their own, meaning my database doesn't necessarily talk to your database. Therefore, if you and I want to exchange, it's not that easy. So what Swift is doing, along with Chainlink, who is a crypto-based company, Swift and Chainlink are basically saying, look, we're going to take all these banks and all these, tokenized securities, and Chainlink is going to help connect them all. And they're going to say, look, via your membership with Swift, we're going to allow you to process transactions, even if they're on different chains, because what Chainlink does is it takes data, whether it's on chain, meaning on a blockchain, or off chain, meaning just kind of lives on a database somewhere, and it puts it in a place where it's transparent, immutable, and it can be interacted with on chain. So what Chainlink is going to do is say, okay, via your membership with Swift, you and I might be able to trade your, tokenized security. It might be $1, it might be USDC for my tokenized security, which might be tokenized Apple stock, even if they're on different blockchains. Swift and Chainlink are working together to do that. This is huge because it means that when someone wants to create a token that represents an asset, like a real estate investment, they can do it based on whichever blockchain fits their need the best and know that Swift is going to take care of the transfer later.
That's kind of awesome. I love this stuff. And this is real world adoption at its best. So, before we wrap, I've got to throw in a little NFT chit chat, right? We've been talking about more game developers building NFT into their games. And Twitch's co-founder Justin Khan, has created a code-free way of doing this through, Fractal?
Yep.
And they basically, whether you're creating good games, bad games, whatever it is, with good NFTs, bad NFTs, whoever cares, it's just an easier way to get there. Sounds very cool. Very, very, very front foot forward.
Exactly. He kind of built, and I'm not a gamer or a programmer, so it's really hard for me to understand all of it. But basically, what he built was this this software, this tool that allows game developers, kind of Web 2 game developers, to bring their games into more Web 3. And I'm not 100% certain what that means, but what it seems to me is it means that if there's a game where I can, I by virtue of my playing, I get certain rewards, or I get certain tools that I can use in the game. I get certain weapons, or if I'm playing sports games, I might, earn money or something like that within the game. I believe what's happening here is Fractal is giving those games the ability to kind of come into Web3, meaning if I own that weapon, if I own that axe or that gun in a certain game, maybe I can transport that. I actually own it, meaning I can use it in another game now. That's kind of that's I don't want to say the holy grail. That's what a lot of Web3 games are going with, is I want you to play our game, but know that you can take your assets, you own your assets, you own what you've earned in that game, or what you've purchased in that game, and you can take it to other games. You can take it to other gaming systems or other worlds or whatever it might be. And that has not necessarily been present in, what is a maybe $1 trillion market, online gaming or just gaming in general. Now, if that's present, that kind of changes everything, because if I can play one game, own those assets, we talked last week, I think, about NFT shoes, right, in EA games. If I can own those in one game and move them to another, or my football cleats in one game become my basketball shoes in another game, that's pretty big, and it creates stickiness, but it also creates the ability that I have something of value now. I can maybe sell those shoes to you at some point, right? That I think is important for gaming.
It does bring around the whole big picture of the interoperability between like metaverse, Web 2, Web 3, and then the real world, right? And we've kind of got all of it coming together in one big package.
Exactly.
Adam, mate, this has been awesome. And thank you so much for your time. Love chatting about all this stuff with you.
All great.
Our viewers are getting more and more excited about every topic we bring to the table. But feel free to send us more. Don't forget, check out Adam's course on digital assets and crypto education, interaxis.io. You can see a link down there. And of course, don't forget to subscribe to Your Finance TV. Thank you for watching. And until next time, good luck investing.